Welcome investors! Take a look at the stock market on Friday, June 5th. The big party we have been witnessing for the past few months is suddenly starting to look like it is over. The endless market rally just hit the brick wall. If you look at the real data right now, the S&P 500 is down sharply, dropping by 2.62% in a single day. The tech-heavy Nasdaq is bleeding even worse. Mainstream media is in absolute frenzy, screaming about the latest macroeconomic reports and panicking over what the Federal Reserve might do next with the interest rates. But on this channel, we don't just swallow the mainstream panic blindly. We look beneath the surface. While the crowd is running around scared because their favorite stocks aren't going up in a straight line anymore, a true contrarian investor looks at the raw structural data to see what is actually driving this market downturn. If you want to understand the real forces shaking your portfolio today, keep watching. Let's talk about the first major shift that the media is missing, the semiconductor reality check. For the last year, microchips and artificial intelligence have been the absolute engine driving the entire stock market boom. Investors have been throwing cash at anything with the letters AI on it, driving valuation to insane heights. But today, reality finally caught up. A major microchip giant, Broadcom, just dropped its financial results, and their revenue completely missed Wall Street's expectations. The stock immediately plunged by over 12%. The single report triggered a massive chain reaction across the entire chip sector. Look at the data. Intel dropped 6%. Micron fell over 4%. What we are seeing right now is the massive reality check. Big institutional investors are realizing that the hype might have gotten way too expensive. They are quietly locking in their profits and rotating their massive capital completely out of tech and into the safe haven sectors like healthcare. Most regular buyers are totally surprised by this, but the data clearly warned us that the prices were getting way too high. Now let's look at the second major under the radar force pushing this market down, the invisible energy tax. Mainstream news wants to talk about the stable, strong economy, but the consumer's wallet is quietly facing a severe squeeze. Because of the ongoing geopolitical conflict in the Middle East, major global shipping lanes, especially through the crucial Strait of Hormuz, are heavily blocked. This is creating massive bottleneck for the global crude oil shipments. Look at the raw data. Brent crude oil is now trading aggressively high, sitting right now at $93 per barrel. Remember, before the conflict, the stable baseline was around $70. This massive jump acts like an invisible tax on every single business and consumer in the country. It drives up the cost of gasoline, the cost of logistics, the cost of moving goods. Wall Street was blindly hoping that the temporary ceasefires would magically bring oil prices down. But the data doesn't lie. Inflationary pressures are stubbornly sticking around, and it is eating directly into the corporate profit margins. So, what is the ultimate conclusion for us as simple investors? The key is very simple. Don't panic when the herd panics. The crowd is running scared today because they suddenly realize interest rates aren't dropping to zero tomorrow. And tech stocks aren't the magical money machine that only goes up. For a disciplined, patient investor, a sharp 2.64% drop in the S&P 500 isn't a reason to look for the exit. It is exactly the kind of emotional discount we wait for. When emotion drives the crowd to sell off high-quality companies, that is exactly when the best long-term opportunities are born. Keep your cash reserves ready, block out the daily media noise, and protect your capital. Thank you so much for watching this today. If you like this video, give me a thumb up and subscribe to the channel. If you didn't like, give me a thumb down. Share your thoughts in the comments below. Do you think that this pullback in the stock market is just getting started? And as always, please remember to take care of your health first, because your body and mind are the greatest assets. Health is always your biggest wealth. Have a wonderful day and see you in the next video.